The price of gold. An ounce of gold right now will cost you about $1,344. But what will it cost you, let's say, in the next 12 months? Here to help us understand the ins and outs and the ups and downs of gold is Frank Holmes. He is the Chief Executive and the Chief Investment Officer for U.S. Global Investors. They are based in San Antonio, Texas. But he joins us here in our 1130 studios. Frank, always a pleasure. Thanks for coming in. Give us your outlook for gold.
Well, I think that gold has a high probability of hitting 1,500 this year. And the double combo with that fear trade is just a weaker dollar, even though rates have been rising. And that's helping actually fuel a global economic growth and is leading to this commodity boom. Because you're getting this great export of our high-end products and using of commodities. And the other part to this is the love trade. And you find that which is 60% of all demand for gold, and it's highly correlated to the GDP per capita of China and India. And their GDP per capita continues to rise. And this is the year of the dog, and there's going to be lots of gold puppies purchased. 24 karat.
Okay, so people are going to be purchasing gold puppies. Is that the main driver here of the price of gold? Because gold has been a very confusing asset class, and a lot of people have been expecting it to gain as people eye inflation. Now people are ratcheting back inflation expectations. What's the main driver here? Well,
the inflation is no doubt an important issue because the concern is that if you use 1990 factors to look at the cost of inflation, inflation is running at 8%. If you use 1980 prices, inflation is pushing close to 10%. So there's an argument that inflation is actually understated. And we're just talking about just the cost for cell phones and mobile technology, all this stuff. It's really creeping up much faster than 2.7% or 3.1%. So I think in the airlines industry, one reason why I created jets, because I saw my options to fly had fallen by 25%, but my ticket prices went up 300%. And that's inflationary. So I think that inflation is going to, I believe the New York Fed has a different inflationary number. It's higher than the CPI number. And I think as people reassess the factors behind it, inflation is probably running closer to over 5%. So we actually have real negative interest rates under that scenario. And that bodes well for gold.
Frank, I want to cast your mind back. I don't remember you call in I guess it was the mid-1990s, 96, there was something called e-gold. And it's been written about as the precursor to cryptocurrencies. It was basically a digital currency that was backed 100% by gold. Governments around the world did not like this. In fact, I believe there was even a application that was written for the Palm Pilot in order to track e-gold. Do you believe that the popularity of cryptocurrencies is having a dampening effect, perhaps even temporarily, on the price of gold?
No, I don't. I think what's really important in my journey of going into that space, I'm the chairman of Hive Blockchain, first company mining these coins in Sweden and Iceland. And I think that you saw $5 billion last year go into these new ICOs. And that's speculative money. And the regulatory world has basically said you cannot speculate in the securities market. You want to speculate, go to casinos, buy lottery tickets, or go to the racetrack. So the millennials, they want to speculate. And that's what that money is. It's really gone into speculation. And now there's a crackdown taking place because some of the stuff was not full, true, plain, and timely disclosure. But I really think that's $5 billion that never went into new exploration for gold or new technology that normally you'd see going into the capital markets.
I'm just wondering, what would have to happen for you to dramatically change your outlook on gold?
Well, first of all, stand back at 50,000 feet.
Sure. Get an airplane from your jets.
Gold has always been advocated a 10% weighting rebalance each year. And why is that? Since the year 2000, gold is 2 times the appreciation of the S&P 500. 2 times. And last year, it was up 13%. That's not bad. So I give you short-term or long-term. Gold has done what it's supposed to do in an overall portfolio against currency volatility. So from that end, until I see something else take place, I don't think gold is a fourth most liquid asset class traded in the world. I think that gold has its place in a portfolio, but don't buy gold to get rich. Yeah, you go and buy it for love, for jewelry, or you buy for your portfolio because it does mitigate volatility and it de-risks an overall portfolio.
What about investing in gold companies that have royalty streams from gold?
My favorite is a superior business model. I mean, just think of it. Franco-Nevada has the royalties on Barrick and Newmont's assets in Nevada, and their revenue per employee is $500,000 for simplicity, and Franco-Nevada is 21 million. I mean, Goldman Sachs is $1 million. So the efficiency ratio is so high. They have very seldom do they have a hit to book value. They pay more dividends, Franco-Nevada, than any other gold mining company in the world. So it just goes a superior business model.
All right, we're going to leave it there. Thanks very much. Frank Holmes, he is the chief executive and the chief investment officer for U.S. Global Investors.